Hey, what's happening, everyone? Aaron Jackson here with the Rotation Report. This is not financial advice. The video works this time edition. Well, at least hopefully. Yeah, I'm probably not going to remember everything I said in the other one. So we're going to have to take a few seconds to get this thing loaded up. Man. Anyways, I think the important thing I really wanted to lead with was like everyone needs this market rally to happen. Okay. You, me, Trump. Okay. The economy, you're getting into earnings season a little bit and you get into the financials, and it's like, actually, the economy is a little squishier than everyone thinks. And we're in a situation now where like the market might be driving the economy. So if we get this big breakout in the S&P 500, cool. That's great. The AI can continue. The consumer spending will continue. And then if it goes the other way, would not be the greatest. Okay, I think we're good here. I think we're good. I think we're set up. And let's start with the dollar. Okay, losing this long-term trend line, a lot of ways to draw it. Uh, you know, it 52-week lows today. I would say, 92-ish, 88, 89 are next. But that's another thing that's just driving everything. Gold goes up every day, silver goes up all the time. I know they're trying to say it's a reversal. I don't know. 80 and 125 are your numbers in silver. And then other than that, just like, stay the fuck out of the way. It's crazy markets, no doubt about it. But so many things are rallying. You would think the major indices like your NASDAQ can go, right? Because like financial assets are levitating. Big rip through the gap there, gap down from the pre-Davos time. Pretty impressive. Pretty impressive. Is the positioning and where to a point where we think this will continue higher? Not convinced, not sold completely on that. We'll just have to see how the week closes here. You got the Fed and the big tech earnings. And last quarter, it really was that confluence that day where you had some big tech earnings in the Fed meeting, and then bang, that was the end of risk of Bitcoin, really rolling over. A little bit of a different setup this time. It's the other way now. People are like concerned about the spending. Is the spending going to be too much? How's the market going to react to that? We're going to find out. But one thing that really stands out is value versus growth here, right? At that Fed meeting, at that pivot, value versus growth bottom ripped. Now it completed a little bit of a half year base here, roughly. I don't know, maybe not half year. Anyways, and now these last few days, everyone knows that the AI earnings are going to be good. Taiwan Semi CEO, he was like, I don't believe these fucking Silicon Valley sociopaths, right? I need to see proof that the AI is making money for you. And then he said he's got the proof from like the Meta, maybe Elon, Nvidia, all those guys. He was like, okay, I'm satisfied. So since then, we've seen this nice little ripper in the growth versus value, but this is a big spot here. So I'm not convinced that this isn't going to go to more of the value oriented market. But you look at Mag 7, could you say this is just a base from October in an uptrend? Looks pretty good. Fuck yeah. Fuck yeah, we could. We don't know it. We'll see in the next few days. But I think what we prefer is look at this massive breakout in emerging markets. VWO finally taking out the lid from the pre-great financial crisis high here. Big time stuff. So yeah, maybe everything just goes up and then this goes up more. The intermarket work definitely makes you think ex-US is going to outperform the major indices along with commodities. And then Claude has really gotten everyone's attention this week. Anyways, this DigitalOcean, they're like, what is it, databases? I know they've got like rent a GPU service or something like that. Anyways, software name on the 52-week high list. Pretty rare stuff here. And then we've got Cloudflare, another one, massive gap today. Yeah, the leader in the space, right? But the price action's been poor, but today's gap got it above, the average price off the November high, breaking that kind of downtrend. The average price off of April, it lost that average price off of the April low. That was a big loss. And then the other day was like 10% below the 200-day moving average. And you're like, oh shit, trouble's picking up. Bang, all of a sudden recovered all of these averages. That's pretty impressive. So, we'll see 190, 195-ish. that kind of zone. Today's gap, huge reference point. Maybe it can turn. I'm not convinced like it will. I think this group is just, all the strength they see, they're going to continue to see relative underperformance and possibly outflows. So we'll see. And then there's Zoom, which apparently owns some Claude, some Anthropic in their venture arm. Of course, we're all wondering, hey, I mean, some of my technician friends are like, look at this bottom breakout. And then it's just a nice, maybe a stage 2 base, just an early little consolidation there and early in the trend turn here through 90, 92, something like that. Maybe they own enough of Anthropic where it matters, so definitely keeping an eye on that. Not really sure what to make of it, but you can make the case that, okay, 120-ish would be next if it can hang in here the next week or so. And then, beyond that, who knows, but that's purely just an Anthropic play. And then there's AI infrastructure, your Nebius, whatever. Very interesting low area yesterday. Look, we know it's shortages in the AI, right? Like all the components, all that shit. It's shortages at least through the end of the year. It's just a matter of, hey, does the market be like, no, the spending, you got to start turning some profits here, Meta, stuff like that. But real nice area to shoot against in Nebius. And then it's a massive inflection point. I think violence is coming is the best way to put it. And here's Robinhood with this massive half a year distributive kind of top looking formation. But then again, bang, 200-day moving average. So maybe something happens with the crypto post Fed and there's a little something, a little shakeout below the 200-day. I'm not sure when earnings are. I'm guessing within the next week or so. But if this can do something like a little shakeout and then rip from there, and then what? Maybe it is game on. Maybe it is just another, you want to call it an AI bubble. Oh, they'll be calling it an AI bubble if that happens. But either way, I think we're just setting up for just a massive, violent kind of move here, regardless. Definitely like a volatility. We've got some vol hedges on. They're doing all right compared to, the market up basically every day for the last week or so. And then Coinbase. You're like, when is this Coinbase going to finally catch a bid? Well, actually, this showed up on the 9-month low list yesterday, but here we are looking pretty good, looking like a nice little spot around here, 195, 200. If a buyer's ever going to step in, maybe it's around here. If not, obviously 140s stands out. It's really, really kind of sloppy though. Just not sure about crypto in general. And man, just thinking about it. God, I hope this video works this time. But and then moving on to financials. So this is where things get interesting, right? Because there's the debate, hey, should they be cutting rates? Should they not be cutting rates? Capital One actually admitted, now they're seeing 2 quarters of a row where it was like, hey, the consumer spending is strong. It's above trend. We're optimistic the economy is growing. Today, they're like, maybe that's just more just normal seasonality, nothing special here. And the stock is just not doing so great lately. But maybe it's just a little shakeout here, recovers. But it could be like an early kind of warning sign going on here. Definitely worth keeping an eye on that. And if you look at financials relative strength, my God, look at that. Pretty closing in on 52-week lows here, closing in on multi-year lows, closing in on post-COVID lows, not too far away. New relative low for the whole bull market would not be great, but time will tell. And then there was this Apollo Global Management. They had to take a 100% loss on some sort of asset-backed loan. They're like, the collateral's great on this loan. Everything's good. It's a good risk. And then they're like, well, it's a zero, actually. Actually, it's a zero. And for the last half year now, we've seen them pile up. And now Trump's making a big deal about the fraud. And everyone's like, damn, that's a lot of Somali fraud, healthcare fraud, this fraud, that fraud. So now all the bankers are like, yo, what the fuck's going on? Do we need to check into these loans? Are we sure everything is good here? Are we sure? And so now they're kind of looking a little deeper. Usually the whole thing is, basically the financial system is designed so you just do the deals and then nobody does any due diligence and then number continue to go up and, and on and on and on forever and ever. But now they actually are looking a little bit and it's like, fuck my life. Holy fuck. So definitely keep an eye on Apollo around here at Trend Support. You get the news out. You would think buy it here. It should be good. We'll see. And then there's Citigroup again. This one in banks, kind of interesting. Just kind of stuck at the top of this range off the great financial crisis low. You could definitely see how this kind of rolls over from here. And then I didn't throw the chart in the deck, but also regional banks had a nasty close last week. Nasty close in the regional banks. We'll see how that plays out. Not really much of a bid this week. Definitely financials lagging pretty hard, but we'll see. It's been a strong year for the short financial ETF FAS, but maybe you get some of this news out and it's setting up a rip. We'll see. JP Morgan here, Jamie Dimon, for the first time of the whole, post 22 rally, he's actually like, oh, things are good. Barring a geopolitical shock, everything's good. And he's been like cautious and bearish every freaking quarter for 3 years now until now. And then the stock reacted like this. So, 285, 290, I don't know, looks like a pretty good support zone to me, but 200-day moving average around there. But, kind of sloppy, kind of a couple of fake breakouts there. We don't like the fake breakouts. And then there's Blue Owl Capital. I think this one was getting beat up just because of maybe it was like being overexposed to the hyperscalers or something was going on. I don't know. It was in the news. Anyways, nice little area here. If it's going to bounce, this would be a great spot for it, right? Somewhere right around here for the low to be in. So definitely worth keeping an eye on that one. Yes. And then I put out some targets on the old stocktits.com and, threw out some egregious levels, offensively low targets. I think it was 60. It might've been 80. I think it was 60 on this AST. I don't know. This guy right here, something like this right here. The whole idea is simply you pop the wedge, everyone's excited, you get back in the wedge, and then that's just the end of it. Of course, above 100, you could be like, fuck you, this is going to 200. And, could be. I will say, ASTS stream, very fun people. Of all the people, I put egregious bearish targets out on like 4 or 5 streams. I can't even remember, but definitely ASTS, definitely the funnest group of them all. So shout out to you, ASTS stream. And then, yes, Tesla, yes, big low number. It was either 200 like this zone, or maybe it was 270 because that's been a big zone for a long time, but very low, very egregiously low. Basically, the whole idea is this. Look, you got a fake breakout here. You can't get above this key 490 area. So it's going to go, if it's not going to break out, then what's it going to do? Break down? Okay, maybe. I tend to think we're seeing some evidence these things can. And, but we'll see. Love the power wall. That's going to be a big business for them, but it could be a situation where the costs are kind of out of control there. But, just the rally we've seen here, definitely think it makes it vulnerable, especially given these are the type of stocks people are selling to buy other shit, whether it's oil, commodities, emerging markets, Europe, whatever. But you want a good target. You want a bullish upside target, you say. Beautiful. Baker Hughes. This is energy services. It's just now taking out the downtrend from the pre-great financial crisis high. Look at that beautiful thing. It's not just oil services, it's energy services. So you get a little bit of everything. They just made a big acquisition. Stock looks good. I think it's going to 100. There's a bullish price target for you. Buy the pullbacks in Baker Hughes. So, no one owns energy stocks, and this is just one of the best. It doesn't get better than that as a fresh breakout in an under-owned group. And then Meta, another one. Okay. Bearish target on Meta. Ooh, it was a pretty low one. 400, I think. So basically, the average price off the high here is right here. 673. That's your average price off the high. Now, this could be wrong for sure. You get a nice little earnings reaction. There's a gap, I think, about 750, basically right here. 750 in play. I think another one where the broad formation is like pretty squishy. But hey, I know people like those smart glasses. Everyone's talking about the smart glasses. Maybe it works, but I tend to think, even if you get up to 750, I tend to think lower. You're going to need to see through 750, but that's what makes a market. And then there's Reddit. Another one, pretty simple. You had this momentum high in February, couldn't break above it once, couldn't break above it twice, couldn't break above it 3 times. Now you're below it. I know people will say, no, versus 170, it's fine. And sure, that's one angle to take. I think the evidence is pretty damn clear that like, okay, not going higher. So what's it going to do? Go lower, fill these gaps, get to the bottom of the range around 80. Yeah, that's basically what we've got going on there. And then moving on to like some other, a lot of we're talking. There's going to be a pickup in violence, and it could be a pickup in this, AI bubble violence. So you got something like Hut 8 mining, AI infrastructure, great. It's kind of consolidating here nicely above this old base, right? Look at that. Looks pretty good. Looks pretty good. But there are some sellers around. There's just in all these AI type names, because people don't know, is the market going to call bullshit on the AI spending? There are lurking sellers, some fund distribution, no doubt. They're taking money off the table as you would after like, 400-500% gains, right? Like it's only natural. So great one to keep an eye on here. I don't know, looks good. And then we've got Ion Q. Look at the Ion Q. Structurally still holds up. People are worried about Japan. All right, well, that's cool. Fucking Besant. What if Besant's just going to throw a little QE on it? Throw a little QE on it. Then this Ion Q, you start getting above 50, 55 or so. Now you're talking again for another leg. I mean, man, that is just some nasty price action up over here. We don't know what's going to happen, but man, the market does kind of trade like just all asset prices are going to levitate a little bit. And then there's the Joby Aviation. Yes, flying cars or whatever it is, flying helicopters. Huh? How about that? Flying helicopters. Now, 200-day test here. So that's real interesting. Big consolidation. You can say definitely some trapped longs, but bigger picture, very interesting, just right around this area for some sort of bottom, kind of like your Robinhood. And it's very interesting how these things are all kind of lining up. There's Shopify as well here, right at the 200-day moving average, 135, something like that. And if you get a little lower, there's like a gap fill 128, 127, something like that. Nice little area there. So any kind of shakeout and recovery, but just a lot of trapped bulls here. But you do wonder, maybe they've all just given up and they're like, I'm now a silver bull after, half a year going nowhere. And then 170 to 135, that'll get you to sell, won't it? But yeah, that'll just about do it for me. Let's see if there's anything else we should talk about. Yes. Yeah, a lot of talk about the China military purge, and that like, oh, maybe that's a good sign. Maybe that just means Xi's not going to take Taiwan now. I would say just anything geopolitically, any of this news you hear, you ignore all the news. You react to people's reactions to the news to take advantage of their reactions to the news, if that makes sense. I don't know. But you know what I'm saying? You don't be like, oh, they said this. You'd be like, all right, why am I hearing this? Why is this going on? Right? That's the deal there. And please stop taking the news so serious. But yeah, big picture, very bullish on violence coming in the markets. So we'll just have to see how the stock market Super Bowl goes, how the week closes. And until next time, everyone, y'all have a great day. And if you like the video, do me a favor and like the video. Peace.